The global economy has been dominated by two major currencies for decades, the gold standard and the petrodollar. Both have had a significant impact on the world financial system, shaping the way in which nations trade and do business with each other. However, in recent years, the influence of these currencies has declined, and new currencies have emerged to challenge their dominance. The gold standard, which was used from the late 19th century to the early 20th century, was a monetary system in which the value of a country's currency was linked to a fixed amount of gold. This meant that if a country wanted to increase its money supply, it would have to mine more gold or purchase gold from other countries. The gold standard was considered to be a stable and trustworthy system, as the value of a currency was linked to a tangible asset. However, the outbreak of World War I led to the suspension of the gold standard, as countries needed to print money to finance the war effort. The outbreak of World War I was a turning point for the gold standard, as it led to its suspension. The war effort required significant financial resources, and countries found that they needed to print money to finance their military operations. This led to an increase in the money supply, which put pressure on the gold standard and weakened its ability to maintain the value of currency. The suspension of the gold standard allowed countries to print money without the constraint of having to acquire more gold. This gave them greater flexibility to fund the war effort, but it also had the potential to lead to inflation. In many countries, the suspension of the gold standard led to a significant increase in the money supply, which in turn led to high levels of inflation. This made it difficult for people to maintain the purchasing power of their savings, and it also contributed to economic instability. Despite these challenges, the suspension of the gold standard was seen as a necessary step to finance the war effort. As the war continued, countries found that they needed to print even more money to pay for their military operations, and the gold standard became increasingly untenable. By the end of the war, the gold standard had been effectively abandoned, and many countries were left with significant levels of debt and high inflation. The suspension of the gold standard during World War I had a profound impact on the global financial system, and by the end of the war, the gold standard had been effectively abandoned by many countries. As a result of the need to finance the war effort, countries around the world printed large amounts of money, leading to a significant increase in the money supply. The top 5 countries that printed the most money, including the United States, the United Kingdom, France, Germany, and Italy, saw their money supply grow by a substantial amount, leading to high levels of inflation. In the United States, the money supply increased by over 200% between 1914 and 1918, and inflation reached an all-time high of 15.61% in 1918. In the United Kingdom, the money supply grew by over 120%, and inflation reached a peak of 22.2% in 1917. France saw a similar trend, with the money supply growing by over 170% and inflation reaching a high of 19.3% in 1918. In Germany, the money supply grew by over 300%, and inflation reached an astronomical high of 1,470% in 1923. Italy also experienced a significant increase in the money supply, growing by over 300%, and inflation reached a high of 52.3% in 1922. The end of the war left many countries with significant levels of debt and high levels of inflation, which had far-reaching consequences for the global financial system. The suspension of the gold standard had allowed countries to print money without the constraint of having to acquire more gold, but it also had the potential to lead to inflation. The experience of World War I demonstrated the limitations of the gold standard as a monetary system, and it helped to set the stage for the development of new currencies and financial systems that were better suited to the needs of the modern global economy. The suspension of the gold standard during World War I led to a significant increase in the money supply and high levels of inflation. The aftermath of World War I had far-reaching consequences for the global financial system, as many countries were left with significant levels of debt and high levels of inflation. The suspension of the gold standard during the war had allowed countries to print money without the constraint of having to acquire more gold, but it also had the potential to lead to inflation. This experience demonstrated the limitations of the gold standard as a monetary system, and it exposed the fact that excessive printing of money can result in high levels of inflation. The relationship between printing money and inflation is well established, and it is widely recognized that increasing the money supply can lead to a decrease in the value of currency. When a country prints too much money, it can lead to inflation, as there is more currency in circulation chasing the same amount of goods and services. This can result in higher prices, and it can erode the purchasing power of people's savings. The experience of World War I highlights the potential risks associated with excessive printing of money. The suspension of the gold standard allowed countries to print money without the constraint of having to acquire more gold, but it also led to high levels of inflation. The end of the war left many countries with significant levels of debt and high levels of inflation, which had far-reaching consequences for the global financial system. The experience of World War I exposed and it demonstrated the fact that excessive printing of money can result in high levels of inflation. This experience helped to set the stage for the development of new currencies and financial systems that were better suited to the needs of the modern global economy, and it continues to serve as a cautionary tale about the risks associated with excessive printing of money. The experience of World War I marked the beginning of a new era in the world financial system. The suspension of the gold standard paved the way for the emergence of new currencies and financial systems, and it helped to set the stage for the development of the petrodollar in the 1970s. Today, the gold standard is remembered as a historical footnote, and it has been largely replaced by other currencies and financial systems that are better suited to the needs of the modern global economy. The petrodollar, which emerged in the 1970s, was a system in which oil exporting countries agreed to sell their oil only in US dollars. This meant that other countries, even those that did not trade in oil, had to hold US dollars to pay for their oil imports. As a result, the demand for US dollars increased, and the currency became the dominant reserve currency in the world. The petrodollar has been an important factor in maintaining the dominance of the US dollar, as it has allowed the US to maintain its position as the world's largest economy. In recent years, however, both the gold standard and the petrodollar have come under pressure. The rise of alternative currencies, such as cryptocurrencies, has challenged the dominance of traditional currencies, and many countries are looking for new ways to trade and do business without relying on the US dollar. The increasing political and economic uncertainty in the US has also led to a decrease in the demand for US dollars, as investors seek to diversify their portfolios. The emergence of new technologies, such as blockchain, has also had a significant impact on the world financial system. Blockchain enables the creation of decentralized digital currencies, which can be traded and used as a store of value without the need for intermediaries. This has opened up new opportunities for countries to trade and do business with each other, bypassing traditional currencies and financial institutions. For example, countries like China and Russia have been investing heavily in blockchain and cryptocurrencies, as they look for ways to reduce their dependence on the US dollar. Another factor contributing to the decline of the gold standard and the petrodollar is the increasing political and economic power of emerging markets. Countries like China and India have been growing rapidly in recent years, and their increasing economic strength has led to a shift in the balance of power in the world. These countries are looking for ways to challenge the dominance of the US dollar and create new systems that better reflect their own interests. The decline of the gold standard and the petrodollar has also been driven by concerns about the long-term stability of these currencies. Many experts have raised concerns about the sustainability of the US dollar as the world's dominant reserve currency, given the increasing levels of debt and political uncertainty in the US. At the same time, there are concerns about the stability of gold as a store of value, given its limited supply and the difficulties of mining it. Despite these challenges, the gold standard and the petrodollar are likely to remain important currencies for the foreseeable future. Both have a long history and a deep level of trust and familiarity, and they continue to play a significant role in the world financial system. However, as the global economy evolves, it is likely that new currencies will emerge to challenge their dominance. This is for educational purposes only and should not be taken as financial advice. The information provided is not intended to be a substitute for professional financial advice. Please consult a financial professional before making any financial decisions. Please, comment, like and subscribe.